Howdy, Rick.
Hey Megan, how you doing?
I'm doing well, thank you. Here we are on a Wednesday, but we're here. We did not record last week, as we know, but we're here today and we're actually going to record two sessions. So we might be wearing the same outfit in two videos. Rick, we wouldn't be able to tell, but we probably would be able to tell.
Same t-shirt, same gray hair. I'm good.
Exactly. What can I say? Well, Rick, you've picked two great topics today, but let's just cover the first one in this episode. So why don't you go ahead and lead the way on what we're going to talk
Yeah, 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 I like this stuff because we deal with this a lot, and I find that frankly, a lot of home buyers, home sellers, realtors are not really well informed on this topic. And I
about.
find myself doing a lot of, I guess, education and teaching around it. And then once people
Mhm.
get it, they go, "Oh, that makes sense." But they didn't know. Well, they kind of know about it, but they had maybe we're looking at it quite the right way. So
Right.
let's talk about that. So let's talk about busting the myths of FHA loans and why they're as good or better than a conventional mortgage.
I'm
And
ready.
so let me start off by saying it first. So I think for me at least, when I look at things, I look at what is the history. I always look at what is the why. What is the why behind things? And what people don't know is that FHA is Federal Housing Administration, also known as HUD, Housing and Urban Development. Now,
Mhm.
why do we have these loans? Where do they come from, right? And what is HUD's role or FHA's role in these loans? And so we have to look at the history of that real quick. They came out around when if memory serves me right, 1933. We had a big housing boom. The problem in those days, there was not a liquid market for home loans. You had to go to your local bank and they ran out of money. It was a housing crisis in terms of money. And
Mhm.
so the government came in and said, "No, wait a minute, let's make money available to homeowners." And it was really designed around first-time buyers, but they made the money available and with very low down payments. And so what FHA and HUD did is they are not actually the lender on these loans. What they are doing is they are guaranteeing the loan. They're backing the loan for the lender. Okay, so
Mhm.
that's why you have insurance on these loans. So HUD is going to essentially back that loan for the homeowner in case of a default, the bank doesn't lose their money.
Mhm.
And HUD guarantees it. The government essentially guarantees the loan, is what happens. So that's the origin of FHA, and the whole idea behind it was designed around first-time home buyers in
Mhm.
those days. FHA, of course, has evolved a lot, but let's talk about what the differences are. Um, and as it's evolved, and this is where some of the problems come into play. Years ago with HUD, FHA, that when you had a loan, FHA employed their own appraisers, and you had to actually order the appraisal through FHA, and then they would assign their appraiser to go out and do the FHA appraisal. And all they did was FHA appraisals. That's all they did is designated appraisers employed by HUD to do these appraisals. And frankly, in those days, and listen, when I got into business, it seems like forever now, 1981, that was what we did in those days. We had ordered the appraisal through HUD. They went out there and did it. Separate format, different forms, everything. And they were frankly tougher on those appraisals. They nitpicked it. They had more conditions.
Oh
It
yeah.
was just a much more difficult process. As
Mhm.
time evolved, they gave that authority back to the lenders with respect to
Mhm.
appraisals. And so now with appraisals, the FHA appraisal is done by the same appraisers that do conventional appraisals. There's no difference
Mhm.
now in terms of the appraisers. It's the exact same process on an FHA loan versus a conventional. But
Mhm.
people still have this stigma of, yeah, but they're tougher. No, they're really not. Look, the reality is, even on conventional mortgages, if you have a health and safety violation, they're going to call that out every time on a conventional loan. We know that. We've seen this, right?
Mhm.
Same with
Mhm.
FHA. Now, what's the benefit to the buyer? Look, we know that in an FHA loan, FHA is going to look at things like the utilities, make sure they're up to working, the gas is working, and those kinds of things. Those are designed to protect the home buyer.
Mhm.
Look, we don't want to sell a home to a buyer that's got faulty gas lines or stuff's not working. We won't do that. Okay. And with respect to values, look, here's the deal. The comps are the comps are the comps. The house that sold down the street for 800,000 is still an $800,000 comp for an FHA loan as it is for a conventional mortgage.
Mm-hmm.
So with respect to value, you're not going to get any different valuation on an FHA loan than you would a conventional loan. The comps are the
Mm-hmm.
comps. So we can dispel that theory right away. And I frankly never have an issue with a rare exception on an FHA loan. That's only when the property is just really, really in bad shape. Like that's
Mm-hmm.
even going to get some attention with conventional mortgages.
Yeah.
So that's one thing we want to really dispel there right away. Um, the other thing of it is that sometimes sellers don't want to accept these offers because they're FHA. So that's where you and I come into play, right? We explain to the sellers, well, here's the reason why it makes sense and here's why it's a good deal. And FHA home buyers, by the way, are very qualified home buyers. They're not less than, they're not, they're very qualified. Otherwise, we would not be approving those loans. Okay. The other thing of it is people think, well, FHA costs more than conventional. That
Mm-hmm.
simply is not true. And let me tell you why. With conventional mortgages, they're very FICO or credit score driven, very sensitive to FICO scores. And so to get the better rates on a conventional mortgages, you want to be really above 720. Look, a
Mm-hmm.
lot of buyers are not above 720. Some are 660, 680. By the way, that's not bad credit. That's still really
Right.
good credit by all standards. Okay, but with a conventional mortgage, if you're a 660 credit score, they're going to really give you a much, much higher rate, all day long, a
Mm-hmm.
much higher rate. But even on a 720 credit score, an FHA loan is going to be a lower rate. FHA is not as much credit score driven. Let me give you an example. We're closing an escrow this week for another buyer. This is a high balance loan. It's a higher cost loan. Okay.
Mm-hmm.
And we're closing that loan for the home buyer. You ready for this? And by the way, it was a lower credit score, lower down
Mm-hmm.
payment buyer. We're closing that loan at 5.75%.
Oh, wow. That's really great.
Okay. So that's a great loan. This is a buyer, by the way, that I had to talk her into, here's why this is a better loan. I had to explain it to her and as well to their agent. It was a
Mm-hmm.
process, of course. So look, she's getting a much better loan, a much better payment. So FHA is always going to be, in almost every case, a better rate. And especially so with low down payments, because the
Mm-hmm.
low down payment loans are typically higher rate on a conventional. And if you're buying a condominium, if you're putting less than 25% down for a conventional mortgage, they have a
Mm-hmm.
much, much higher rate. They add a pretty good price add to that cost. With an FHA loan, there's no price add to the cost of the loan for a condo. It's the same as a single family residence, even with the small 3.5% or 5% down payment.
Mm-hmm.
So
Yeah,
if
and
you were
that's
to compare, oh, go ahead.
no, I was going to say it's a fantastic, product. And when Tim and I bought our first house, we used an FHA loan, you know.
Yeah. And that's the right choice. That's the right choice to make. I wish that
Yeah.
most buyers would do that because it would save them a lot of money.
Yeah, they
Um,
probably are driven by the realtor saying that it wouldn't make for the best offer if it was FHA because it wouldn't have as much down as everybody else. But like we always say, if you're approved for a loan, you're approved for a loan. Doesn't matter
correct.
if it's 96.5% or 50%. Approved is
Correct.
approved.
Yeah, and that's again where you and I come into play. We will explain to those listing agents that no, if we have a validated, fully approved loan here, it's the same as a conventional mortgage of 30, 40% down. And let's face it, you
Mhm.
and I both know from experience, sometimes a 30 or 40% down conventional buyer are really tough loans to do. They're
Yep.
knuckled all the way through this deal. They're really tough to do.
Yeah.
So a 30% down high FICO score conventional mortgage does not mean it's an easier loan to do by any means.
Right.
Not at all. The other myth is that the FHA is designed for first-time home buyers. You don't need to be we talked about that a minute ago. You don't need to be a first-time home buyer for an FHA loan. Now, it's true that most FHA buyers are first-time home buyers like you were years ago.
Hmm.
That's very common. But look, there's people that owned a home years ago. They sold it for whatever reason. Now they're renting for a little bit longer and don't have
Hmm.
a big down payment or they have lower FICO scores. Look, not being a first-time buyer is not going to limit them from getting the FHA loan.
Hmm. Hmm.
It's not. And I do a lot of FHA loans for people who are not necessarily first-time home buyers.
Hmm.
Um, so that's really pretty much it. I mean, again, you get lower interest rates. you have better, and by the way, FHA is more forgiving on debt ratios. You
Mm-hmm.
can have a higher debt ratio, a lower credit score. So they're more forgiving. They're actually more, what I'm gonna say, more liberal with
Yeah.
underwriting and
Mm-hmm.
approvals than you would be on a conventional mortgage.
Mm-hmm.
So for that reason, they're typically easier loans to do, and you don't have to have perfect credit. I mean, you can do an FHA loan down to a 580 credit score, as crazy as that sounds.
Mm-hmm.
You
Mm-hmm.
won't get anywhere near that on a conventional mortgage. So,
Mm-hmm.
so overall, I think it's real important for the public to know that FHA loans are a viable option. They're a great option, and we should do a lot more of those for those types of buyers.
I agree. Well, Rick, that's really great information. And as always, people can reach out to you directly if they want to learn more
Yeah, of
about how
course.
FHA might be a good tool for them to get into to a
Yeah,
house. Maybe not even
we'll
the
look at
first
it.
house, but a house.
That's it.
Thank
You
you,
got it.
Rick. All right.
Thanks, Megan.
All
Appreciate
right.
it.
We will talk to you